Hi, this is Dan Danford with DadsDivorce.com. We're doing a series of webcasts where people ask us questions and we try to answer them as best we can. Today's question is very common. It comes from one of the viewers at the website. How many years do I need to keep my personal financial records? Believe it or not, that's probably one of the most common questions I get from people. And the answer isn't as simple as it might seem, because there are different reasons to keep different kinds of records. The first one that I'll bring up is pretty simple to understand, but it creates some of the complexity, and that's warranties. It really depends. Many different products have different warranty periods of time. A lot of them, it's just a year or 6 months or a month, but other things have a much longer warranty. Like if you put a new roof on your house, that's typically a 15 or a 20-year warranty. You can even buy things that have shingles that have a 25 or a 30-year lifespan. Some cars come with as much as 50,000 or 100,000 mile warranty on certain parts on the cars, and that can run for 5 years or longer. So my first rule is, match up the paperwork with the item that you buy and the warranty period. So if you buy something with a lifetime warranty, I'd keep those purchase papers in the drawer until that particular appliance is done, until you pass it along to somebody else. You either sell it or whatever. So that's the first rule. Second rule, and maybe more commonly, people ask me about taxes, tax information. The general rule from the IRS is 3 years. They can look back at your taxes for the last 3 years, although they can go back further if they suspect some kind of fraud or criminal activity or something like that. Basically, there's a 3-year timer running anytime you file your taxes, and they can go back and ask you questions, and you'd have to support that data. My general rule is to keep those things for 5 years. Partly because of the 3-year statute of limitations, but partly because some of that information may be helpful to you in the future. You may be trying to estimate the costs of something, you may be trying to figure out what you did several years ago, and being able to go back to those records would allow you to do that. So my second rule is that for tax type records, I'd say 5 years is kind of my benchmark. Now the third area that people talk about is stuff like statements and utility bills and checks and things like that, sort of the monthly mundane kinds of things. My general rule on that is you keep the statements and stuff until you get an annual summary. If you have a mutual fund or a bank statement or something like that, you probably get statements every month. I would keep those in a folder someplace until you get the December statement. When you get the December statement, it typically is a summary of the entire year, and then you can throw out all those monthly statements. And I generally keep the end-of-year statements on those things. Now, it doesn't sound like maybe you'd need them beyond your tax reasons, but there are reasons. When you buy or sell stocks or mutual funds, there's a tax potentially due or a tax loss when you actually sell them. Okay, so you need to know what you paid for them, plus in the case of reinvested dividends and interest, you need to know what you added to it each year. So you may need to go back as long as 10, 15, 20 years to find out what you originally paid, plus what all the reinvested dividends and interest have been over that period of time. So those annual reports will tell you. So you need to keep those for a while, but I don't think you need to keep all the monthly ones. The same with checks and things like that. Most of us don't get copies of our checks anymore because that's not the way the statements run. But if you do keep copies of the checks, and I've actually helped people, who lost a parent or something, and we go in to look at their financial stuff, and there'll be 15 or 20 years of canceled checks. Okay, well, you rarely need them that long. But it is true that some of those checks might support a claim that you put on your tax return or something like that. And so I'd keep those for 3 to 5 years. Most of us don't get that anymore, so I go back to my annual summary statements as to be what to keep. So I guess that's kind of a long answer to a short question. But basically the rules are, number one, keep warranty information, purchase information for as long as the warranty runs or as long as you keep that particular item. Second, keep tax records for 5 years. That's a little more than you probably need by law, but it might be helpful. And then third, on those monthly records that you get and the things that come to you in the mail to keep you updated on what you spend and where the money went and your statements and things like that, I see keep those monthly statements until you get an annual statement at the end of the year and then shred the rest of them. Okay, so that's my simple summary to a question I get all the time. Hope it's helpful. I'll see you next week on DadsDivorce.com.